Billionaire hedge fund manager Ray Dalio tells CNN trade conflicts are only part of the picture when it comes to tensions with China. Dalio spoke with our Kristie Lu Stout in Beijing and warned of what he called the great sag coming in the global economy. Listen in.
I think we're now touching at the edge of a very touchy issue.
Yeah.
I don't think that we are going to make the Chinese be doing the things that we want them to do any more than they are going to tell us how we should do the things that we want to do.
Yeah.
And the question is, how intransigent is each side on that? In other words, to pass a bill is one thing, to take certain actions is another. I think that's a very sensitive point.
Yeah, in such a sensitive point, it could risk a trade deal between U.S. and China, you know?
I think the trade deal is part of the picture, but it's only part of the picture. There are 4 conflicts that U.S. and China have and that we have to watch.
Yeah.
Trade is one of them.
Yep.
There's a technology conflict. There's a geopolitical conflict, Hong Kong, Taiwan, and so on.
Yep.
And then, of course, there is the capital or currency conflict that could also be part of it. These are all things on the table, and I don't think anyone knows exactly how they're going to be used.
Yeah.
We're now in an election year, and so a lot will change depending on the elections and the post-election period.
Yeah, but looking at the political environment right now, are you seeing just the forecast for U.S.-China relations is going to get darker and darker the year ahead?
The one thing that most Democrats and Republicans are in agreement on is an antagonistic China policy.
Yeah.
So that's correct. How it's going to be handled by whom is up in the air. We don't know exactly.
You're a student of history, and history repeats itself. Are we on the cusp of not a recession, but a depression?
We're in a situation in which a lot of liabilities are coming at us.
Yeah.
To some extent, they're debt. To some extent, they're pension liabilities and healthcare liabilities. More liabilities than we can fund. That would mean they will either be cut back, and people who have those promises will not get those promises filled. I don't think that'll happen. I think that's politically too difficult.
No.
Or there will be more the monetization of those deficits. In other words, the printing of money and that process for dealing with it. So it's very much,
And that's
as I
just
say,
the spinning of wheels, though.
that's just the machine. That's just how the machine works.
Yeah.
So I think we're more in a great sag. The impetuses for growth that began in 2008 and 9 are largely behind us. The cutting of interest rates, the cutting of corporate taxes, and so on. Those are behind us. And I think we're now in a period where we have a lot of these financial assets, which are financial liabilities, that are too big, and they're going to then have to be dealt with deficits and monetization of monetary policy.
So it's not a recession, it's a great sag.
That's what I would call
We
it,
are in the midst of it right now.
Yeah, early stages,
Your fund made a lot of money in 2008 because you were able to position yourself in anticipation of the recession. In anticipation of the great sag, how have you positioned yourself to be able to ride this out?
Well, I don't discuss the particular positions for various reasons, but I would say what we have is a very, very highly diversified portfolio. I think the most important thing for individuals is to know when cash is 0 interest rates and close to 0 or maybe below, and bond yields are low and so on. And equities are priced because they're fully priced because of that. That diversification across countries and across asset classes is an important thing.
Yeah, so you're going to ride this out, of course, and profit well.
We hope. We try.